Welcome in to a daily editorial here on the KE Report. This is a special daily editorial because we are getting an update from a company that I brought on a number of months ago now and have actually received a couple questions and requests for an update. The company is Skeena Resources, traded on the Venture Exchange under the symbol SKE. I have the president and CEO, Walter Coles Jr., on the line with me. And Walter, there's been actually quite a bit of news that has come out of Skeena over the last month and actually just over the last week that is important and we will touch on. But first and foremost, for some of our listeners who maybe aren't up to date on the Skeena story, right now you're focusing on the Snip project. Can you take us through how you went about acquiring the Snip project? Because it really didn't happen all that long ago.
Sure, I'd be delighted to. A little over a year ago, we signed an option deal with Barrick Gold Corp on the Snip Mine. This is a past-producing project. It operated from 1991 until 1999. It produced 1.1 million ounces of gold over a 9-year period at an average grade of just under an ounce per ton. It was one of Cominco's most profitable mines. Cominco operated it from 91 until 96, and then Homestake operated it from 96 until 1999 when they closed the mine. The reason they closed it was the price of gold, which back in the early 90s was about $350, and in 99 the price of gold was down to about $250. So it was a very difficult time period to be operating a gold mine, even one that was as high grade as the Snip Mine. The way the Snip project ended up in Barrick's hands is that Barrick acquired Homestake. So when Barrick bought Homestake, they inherited a portfolio of closed mines, and they'd never operated or made money off of Snip. Instead, they inherited a project that had an ongoing environmental monitoring requirement. So from Barrick's perspective, this was an ongoing cost with really no revenue potential. We approached Barrick and suggested to them that we would be willing to take over that environmental liability, and if they would give us the opportunity to look at it from the exploration side. So we tried to structure a deal that was a win-win. Win for Barrick in that they would get out of sort of an ongoing expense that was roughly in the neighborhood of about $200,000 a year. And for us, it was an opportunity to evaluate an old mine that had been closed when the price of gold was very low, $250, as I mentioned, versus today we're at $1,275 gold. So, our thesis was that there's probably mineralization that was left there that was uneconomic in the late 1990s, but today, given the much higher gold price and the improvements in infrastructure in the Golden Triangle, that could be very profitable today. So that's why we went after Snip, and we were able to structure a deal where we didn't have to pay anything, or we paid a nominal sum up front, but it was really, I guess our payment price was taking over the environmental liability on the property. So as I mentioned, we put the option deal together in April of 2016, and then in August of this year, we exercised the option and we acquired 100% of the property by posting an environmental bond. So that's how we got to where we are today. We own the property 100%. We just started drilling. We had to reopen the entire underground mine up, and we're on to our 6th hole from underground right now. Pretty excited to have some assays to put out, and should have our first assays out on Thursday or Friday of this week.
So it is obviously encouraging for you and your team to finally get the drills turning at Snip. In total, I see that you have about 9,000 meters planned and about 73 holes. As you mentioned, some of the early holes will be released soon once you get those assays. But you did say how high of a grade this Snip gold property was when it was in production. When you're doing this drilling, you're obviously looking for some of this high grade, but what are more of the goals around this drill program currently?
Yeah, I mean, to be realistic, Homestake and Cominco, they took what was called the Twin Zone, which was very high grade, 1 to 2 ounces, and the things they left were the sections that were, say, 12 or 15 grams per ton. Now, the irony is 12 or 15 grams per ton today is pretty darn attractive. So, to be realistic, our goal would be to find 1 million ounces at 12 grams per ton, and hopefully be able to expand up on that. But that's our short-term goal, is try to put together a resource in that range.
So again, some of this drilling will be coming out soon, and it sounds like you'll have a pretty steady flow of, news throughout this drill program. What's going to be some of the follow-ups that you're going to be watching from this drill program to give you an idea of what's going to be planned after this? Obviously, I know it's hard. You don't know what's going to come out of the drilling, but you must have some general idea of the overall plans moving forward, even past this 9,000 meters.
Yeah, we're lucky in that we're not doing grassroots exploration here. We have 280,000 meters of drill data that was completed by the past operators to help guide us. So, they would hit intercepts that, as I mentioned, might be 15 grams, and that was below their cutoff grade, so they would leave it. So for us, it's an opportunity to go back. A, we'll be doing confirmation holes where we're twinning an old hole, and B, we're doing step-out holes where they would drill that single hole, hit 15 grams over, let's say, 10 meters or 3 meters. They wouldn't drill around it. They leave it and say, that wasn't good enough. They move on to a different area. We go back, we drill on either side of that hole and try to take that past hit and grow it. And that's really the advantage here, is we're not doing grassroots. We have good clues on where we need to be drilling, and the challenge for us is take those old leftover intercepts that weren't mined and grow them into something substantial.
Okay, so Walter, just last week, Skeena did close a fundraising that raised $6 million, had some well-known people involved. Gold Mountain Assets Management, which is a subsidiary of Snip Mining, and Sprott. They both took place. Where do you stand now in terms of cash to take you through this drill program?
Yeah, we're probably... right now, we're north of $6 million, probably in the range of $7 million in cash in the bank. And I would say we're very well funded here to complete not only this program, but 2 more programs of equal meterage. So what I would like to see us doing is drilling all through the winter and hopefully putting out drill results on a regular basis probably every 2 weeks for the next several months. So should be lots of news flow, and it is up to the assay gods to bless us with good results. But we're doing everything we can to make sure that we put out results that our shareholders will be happy with.
Well, Walter, I am hoping for you. Hopefully that those assay gods do smile on you, and I know that a number of our listeners are watching this stock closely. One other news event that you guys went through, and that's this share consolidation. You rolled back the shares 10-1. I know that was in the response to a lot of people in the market saying there are just too many shares out there. Now, with just under 73 million shares outstanding, I think it's going to open up the company to a few more shareholders. But can you take us through the thought process and why you decided to do this share consolidation now?
Yeah, we had a lot of internal, I would say, passionate discussions about this. From the perspective of our institutional shareholders, I had one person say to me that if you order a pizza, let's say you order a medium-sized pizza, no matter how many times you slice that pizza, it's still a medium-sized pizza. So I would say that some of the institutional shareholders really didn't care very much. But we've decided to make a broader push to increase our shareholder base outside of just institutions. And the view of the board was, if we were going to attract individual investors, retail investors, we needed to do the rollback, and that's why we've done it. So I also think that we have a responsibility to individual shareholders who may not have the same technical expertise that, like a Zijin, who just came in on the last financing. Zijin's I think it's the second or third biggest gold company in the world. They're a very sophisticated investor. We've targeted most of our capital raising towards institutions over the last 2 years. I think now is a time where we have a project that has the potential in it to be a mine, not a slim potential, but a very strong potential, and that's the Snip project. And so I do feel that now is the appropriate time to do a rollback, and as a result, we will be making a much stronger push to attend the mining conferences and market the story to the individual investor audience now.
Okay. Well, Walter, as I mentioned, I'm looking forward to seeing what, well, some of your drill results will show the market. I know they'll start coming out here and, well, later on this week, and we will maybe stay up to date with you and just follow you through how your drilling is going. Please keep us up to date, and if anybody has any questions for Walter or his team, please feel free to email me or comment below, and Walter is more than happy to answer those questions for you. So again, Snip is traded on the Venture Exchange under the symbol SKE, and they're drilling with some drill results to be coming out very shortly. Walter, thanks for your time today.
Awesome. Thank you.